Thanks a lot for that, Ashish. Have a great day. By the way, the rupee has opened a tad bit. There's a bit of a relief in the sense there's a little bit of an appreciation. 81.62 was the close yesterday. 81.46 is where the rupee has opened today. So a little bit, very minor appreciation is what you're seeing on the rupee. And on the equity markets, not too much by way of respite. The Nifty has opened. The pre-opening rates are indicating that the Nifty will be up. But let's just wait for these rates to adjust. Now it's indicating a 145-point bump up. Let's see how that goes. But Sterlite Global Ventures, which is a wholly owned subsidiary of STL Tech, has sold its entire stake in Impact Data Solutions in order to focus on the core business. In other news that took place a couple of days ago, the CFO Mihir Modi tendered his resignation. To discuss all this in detail, Ankit Agarwal, who's the managing director at STL, joins us now. Ankit, good morning and thanks for joining in. What was the reason for the CFO resigning? He joined barely 2 years ago, and any indication or timeline of when a new CFO will be put in place?
Yeah, good morning. So yes, this was as we shared in the release as well. Mihir was keen to pursue interests outside of STL, and we fully respected that. And very amicably, he's moving on. We have already actively looked at external options, and our own view is probably in the next 1 to 2 months, we will conclude on a world-class CFO. So pretty excited about that.
Okay, so in the next 1 to 2 months, a new CFO will be announced. Any impact on your balance sheet or any impact on your debt reduction plans because of this?
No, it's not. There's no link with this. In fact, as we have been talking, we are continuously focusing on exiting our non-core businesses, one of which we announced last night as well. And in addition to that, we're really focusing on generating cash from the operations to reduce the debt. We've talked about taking the debt to sub 3,000 crores level. So that's the focus for us.
Okay. In terms of selling of your non-core assets, you announced the sale of your holding in data center to focus on your core business. Any more asset sales lined up to exit non-core businesses?
So on this one, I think it's something that was very important for us, and it also signals a strong focus. Most important is where is the management bandwidth going. So we're very, very clear that our core focus is the optical business. We also have a strong services business. So this is where the complete focus of the business will be. We've also earlier indicated that we have invested some amount in R&D on the 5G. That's also an area where we are looking at an external partner. And as we have any developments, we'll share it with you.
Any more acquisitions that you'd be looking at? You've been, moving in that direction. Anything in the next 6 to 12 months?
So as I said, first thing right now is just to consolidate and focus on our core. In our core business itself, we are adding capacity of cable from 33 million to 42 million. A lot of that will now be ready by Q3, including our US facility, which we're very excited about. And we continue to see very large opportunities in India as well on services in particular linked to BharatNet. So this is where we feel we have set up a lot of capacity in hindsight of getting 5G to roll out globally. So we're very well set up now for this rollout in India and globally, as well as BharatNet comes on, we believe we'll be very strongly positioned. So we don't see any need right now for further expansion or investment or acquisition. But of course, we'll continue to evaluate in the future.
Okay, so no further expansion, investment or acquisition from these levels. 1/3 of your revenues comes from Europe, Ankit, and over there we are seeing huge signs of slowdown. There's a massive energy crisis. Has it impacted your business in any way?
So I actually believe we've, even through COVID and even last few months, we've actually seen a pretty strong demand. What's happened is, on the back of COVID, everyone's realized they need a very, very strong broadband connectivity, and that has to be on fiber. So even countries like Germany, for example, while it has so many issues on the economy side, they're less than 15% connected on fiber. And so there's just a massive push by the likes of Deutsche Telekom, even the government, Deutsche Glasfaser. So what we're seeing is a lot of these economies, they are sub 15-20% connectivity by fiber. And so there's just a massive push, very often backed by large private equity players or by the government. So we continue to see very strong demand both in Europe and US. And then, of course, in India, what we also believe is there should at least be a doubling of fiber demand on the back of 5G and fiber to the home.
Okay, so because of this strong demand, how much has your order book grown in Q2 so far? I mean, in Q1, your order wins were one of the highest at 2,800 crores. What's the average win so far and what's the run rate that you're looking at?
We're continuing at the same speed. We're seeing very strong order book from our customers. They're looking at 3 to 5 year contracts with us. And as we move more and more towards cables and our connectivity solutions, they're really seeing the value in that as a way to reduce their cost per home pass. So as we move to more and more of these solutions, we're also really encouraged by both looking at securing long-term contracts as well as profitable contracts.
It's been 3 quarters of losses now that you've reported. Any idea on when you turn into the black?
We are quite positive. I won't specifically comment on Q2 right now, but we are quite positive. As we did share, 3 or 4 of the key reasons were around our container costs going up, some of the raw materials linked to polyethylene, and certain gases like helium, etc. We had talked about increasing our prices with our customers by 7 to 10% at least. That has gone through, and we are seeing benefit of that. Some of that in Q2, which we will be able to showcase, and certainly into Q3 and Q4, we'll see some good upside on the back of that.
Okay, Ankit, we leave it at that. Thanks a lot for joining.